welcome to a new episode of The Value Creators. Today it is my pleasure to welcome Luc Kicken. He's a member of the Fund Solutions Benelux team of Partners Group. Hi Luc.
Hi Stefan, pleasure to be here. Great to be here in Luxembourg today.
It's also a pleasure to host you. So, could you please give us a snapshot of Partners Group?
Sure. So Partners Group is a private markets investment firm. So we are dedicated to private markets. We invest in private equity, private debt, real estate and infrastructure. And we now manage over 127 billion US dollar assets under management. We are a very entrepreneurial firm. It all started 26 years ago in Zug in Switzerland. Today we are one of the leading global investors in private markets with over 20 offices and over 1,600 employees worldwide. Partners Group itself is listed on the Swiss Stock Exchange, and around 25% of the shares is with the founders, partners and employees of Partners Group. On the investment side, we try to apply that same entrepreneurial drive to invest and drive value in our portfolio companies to ultimately build better, more sustainable businesses. If you look at our investment teams today, a third of the people in the investment team don't have the typical financial background that you would normally find, but have an operating background. So they have certain specific industry expertise. And that really enables us to be a partner to the businesses in which we invest. On the client side, we have over 1,000 institutional clients worldwide. They typically invest in our flagship funds, or they invest through customized account structures. Our European clients, they tend to invest in our Luxembourg structures. We have an office here in Luxembourg with around 35 people. Our AFM license is here in Luxembourg, and we perform the risk management function here locally.
That's a real success story. And could you tell us Partners Group's expectations before investing into a business? How does that work?
If you look at our investment process, it's really about building conviction before we invest into a business. And we need conviction on two elements, so on the company and also on the thematic. So on the company, obviously we need to make sure that the valuation we pay for the business is right, we have the right management team, the business has the right competitive positioning in the market. But what's also very important is that we are the right owner for the business in its next phase of growth, and that we can execute on the strategic value creation levers that we have identified and that we have conviction that we can execute on those. So that's in regards to the company. Then we have the thematic, and that's actually where it all starts. We want to invest in segments of the market that benefit from tailwinds. So if you look at the thematic research that we do, we actually spend 2 to 3 years researching a thematic before we invest into a business. So we look for thematics, trends, segments, subsectors, however you want to call it, that benefit from secular growth trends, irrespective of the macro environment, and that can also provide resilience in case of a market downturn. Our investment team is split in 4 verticals. So we have services, health and life, goods and products, and technology. They actively track and research 60 thematics. We have identified 3 giga themes. That's decarbonization, new living, and digitalization. And within those 3 gigatrends, we have the sub-thematics. After this, or in this thematic research, we also map the universe of companies, and we try to identify those that we find most attractive. So let me give you an example of how this thematic research, how we go about it. So one thematic that we really like is HVAC. So that's heating, ventilation, and air conditioning. Why do we like this? Because we see some real growth drivers for this sector. So first of all, HVAC systems, and in particular air conditioning, have really become essential in our daily lives. If the air conditioning breaks down here, everybody wants to have it fixed quickly. Second, in the drive for energy efficiency, bringing CO2 emissions down, the HVAC system is important. So of the energy bill of a commercial building, 40 to 50% of that energy bill comes from the HVAC system. So if you upgrade, spend capex on proper installation of the HVAC systems, you can really bring down the energy costs and the emissions. And third, these systems are getting more and more technically complex. So you really need somebody with expertise to install, service, and fix these systems. So on the back of our thematic research on the HVAC theme, we have made 2 investments. We have made an investment in a service technician business, as well in a manufacturer of installation components for air conditioning units.
And Luc, could you tell us concretely how Partners Group creates value and measures that?
Sure. If you look into our value creation toolbox, we have quite a number of tools that we can choose from. We have basically playbooks that we repeat and can consistently roll out. So one of the playbooks is, for example, platform strategy. It's basically buy and build. It's something we have done many times before. We like to invest in fragmented markets. We typically buy the market leader or the number 2, and then we do a tuck-in M&A strategy. We create scale, synergies, and we also have a bit of multiple arbitrage because we do the tuck-in M&A at lower multiples than the value of the whole platform. Another playbook is digitalization. Digitalization is currently important in all of the businesses that we invest in. And then we have several playbooks when it comes to internationalization, pricing, procurement, operational efficiencies. ESG is also a playbook that we employ. Obviously, we work with minimum ESG standards, for example, when it comes to health and safety in manufacturing businesses. We track KPIs across the E, the S, and the G in all our businesses. We drive value with ESG initiatives when it comes to, for example, energy management, waste management, employee development plans. Overall, we design a customized ESG journey for the businesses that we invest in, and we really prepare the businesses for a more sustainable future. So we have set clear carbon footprint reduction plans for all the businesses that we invest. If you ask me though what really differentiates us in our approach to value creation, I think it's more about how we set up the governance at our portfolio companies to drive value creation. So I think it's about governance, and second as well about company onboarding. So we're very deliberate and specific when it comes how we compose the portfolio company boards. We work with independent board members and we call them operating directors. So these are typically people with a long career in a certain industry that can really help the companies drive value on certain initiatives. So these operating directors, they are not there to check boxes, they are really there to help the management team, to be the sparring partner on specific strategic initiatives to drive value. The second point is the company onboarding. In the end, before we invest in the company, we do all the due diligence that we can do. Like I said, we start 3 years early in most cases. But there is always this final 1 or 2% that you can't put your finger on in the due diligence. So when we have acquired a business, we have an initial period of, let's say, 6 months, where we really listen to the businesses. We listen and we learn. During that time, we set up strategy offsites with the management team, with the operating directors, to really formulate a 5 to 10 year vision for the business. So this is not so much about financials. This is really about where does this business want to be in 5 to 10 years' time. Out of these strategies offsite, we formulate the strategic initiatives that will help us to get to this vision. And we have developed proprietary software at Partners Group called PG Alpha that help us to track these strategic initiatives. So this proprietary software really tracks operational KPIs in the business that will eventually be a leading indicator for where EBITDA growth will be for these businesses. A couple of weeks ago, I had the pleasure to meet our lead operating director at Schleich. That's Luisa Delgado. So Schleich is a German toy manufacturer. You may have heard of the brand. They make toy figurines. I have brought here one of their toys from the wildlife collection. It's a very nice toy. It's very high quality. It has a very nice touch and feel. And it has real educational value for children. It's really about free and imaginative play. Schleich is also a very strong brand name in German-speaking Europe today. And we really want to make this a global brand. That's what it's about. Luisa Delgado, she has worked her whole career as C-level executives in strong consumer brand companies. She also has several board positions currently in other big consumer brands. So we asked her to join the Schleich board, given her expertise on that topic. So she told me that initially she was a bit hesitant to join the board of a private equity-owned company. And Schleich is her first private equity board. When she heard about our approach to really focus on the long-term vision of Schleich, developing a plan for 5 to 10 years out, when she understood we were supportive of an all-inclusive employee investment plan for all Schleich employees, giving them the opportunity to join equity ownership in Schleich, when she understood our focus on ESG when it comes to using more sustainable materials for making these toys, reducing plastic packaging, she decided to join us on the journey. So Louisa is one of 3 of our operating directors at Schleich. The other 2 operating directors are also responsible for specific strategic initiatives. So one of the other operating directors focuses on the expansion to the US. So as I said, we want to make it a global brand. The US, the UK, and France are key markets for us in our value creation plan. And then we have the 3rd operating director who has specific expertise when it comes to supply chain management, operational setup, which is really key for a company like Schleich.
I have to admit, this is really a fascinating example on how to do it properly with all the required expertise. And we also love those figurines with the kids. We have many of those, and that's really great success.
That's great to hear.
Luc, could you please illustrate your value creation process with eventually another example?
Sure, let me tell you about one of our investments called Foncia. So Foncia is the European leader in residential property management services. So their business has 2 core business lines. So one is joint property management. Let's say you own an apartment in an apartment building. You need a party that organizes the annual owners meeting. You also need to be able to call somebody when the lift is broken or the roof is leaking. Foncia can take care of those services in jointly owned properties. The other part of the business is lease management. So let's say you are a landlord and you want to rent out your properties. Foncia can take care of all the administrative tasks when it comes to rent collection. They can do small maintenance tasks if the tenant calls that something is broken. That's really the core of the business, and it's a very recurring revenue business that is based on fixed annual fees that the customers pays. So we really like that it's recurring and stable. On the back of those core business line, Foncia can offer a lot of auxiliary services. So let's say you want to sell your apartment, Foncia can help with that. You want to have certain insurance for your apartment, Foncia can help with that too. We first invested in Foncia in 2016, and given our conviction on the business, we have re-underwritten another investment in Foncia in 2021 to extend our ownership in Foncia. Within Foncia, there are 2 key value creation levers. One is platform consolidation strategy, and the second is a digital transformation. So in France, Foncia is the market leader for these services with just shy of 20% market share. They are twice as big as the number 2, and it's a very fragmented market in which they operate. So they have a lot of small local property managers. It's really the natural habitat for a tuck-in M&A strategy to consolidate the market. So during our ownership, we have accelerated and professionalized that tuck-in M&A function. Foncia now has 40 people who are dedicated to sourcing, executing, and integrating these smaller property managers. We still see a tremendous amount of opportunity to continue that the coming years. So that's the consolidation strategy. Then we have the digital transformation. Already when we did the first DD on Foncia, it was pretty clear that an investment was needed on the digital tool side. So Foncia was operating on an ERP system called TetraWin that was coded in the early 90s. Pretty old system. It took 15 minutes in the morning to boot. It took the accountants 3 hours to close the accounts, and it could take 6 minutes to open a simple PDF. Very frustrating for the employees, They were losing in a year up to a month of productivity. So we again also here thought about the governance setup to address this. So we hired Baudouin Pro, ex-CEO and chairman of BNP Paribas, as our lead operating director, who has vast experience in digitalization of banking services. Also, we hired a new CEO, Philippe Sol, who had successfully led multiple digital transformation projects in other businesses. Together, we decided to internally at Foncia develop a new ERP system from scratch. So Foncia hired 80 young developers. They put them in a separate office in the heart of Paris to really create a startup vibe. And they developed a new ERP system. And they actually done it. So last year we piloted the new system, and currently we're rolling out the system to all the branches of Foncia in France. And this is really a transformation for Foncia, because it changes both the back end of Foncia when it comes to administration, accounting, really increasing the efficiency tremendously, and at the same time it also changes the front office of Foncia. It changes the way how Foncia interacts with its customers. And this really drives customer satisfaction because responses, for example, are much faster in this new digital setup. So we are very excited about this investment that was made, and in our extended ownership period, we really hope to reap the benefits of those efficiencies and the new business model in general. At the same time, Foncia is now also expanding internationally. So we have just announced a large acquisition in the UK, where we bought the market leader, and that really sets Foncia up for an extended European role coming years. So there's a lot more to come.
That's really, again, very famous company. Came across during my studies in France on the old Foncia style. Very happy and eager to see how you will continue transforming this firm. Luc, it was really a pleasure to have you here today. Thanks for sharing all those insights and great examples.
Thanks so much for having me. Thank you.